Good morning, everyone, and welcome to today's webinar, Open Finance, Build It and They Will Come. My name's Claire Cox and I work for the technology consultancy Scott Logic, and we build bespoke software solutions for our clients who are primarily in the financial services and public sectors. Now, I'm delighted to be joined this morning by my colleague Nick Betts, Principal Consultant at Scott Logic. Nick has more than 20 years of experience within the field of technology. He started his career in the late 90s as a software engineer, and since then he's led a variety of high-profile digital transformation projects and programs with a specialism in retail banking, open banking and central government. So a couple of points of housekeeping before I pass you over to Nick. If you'd like to ask a question, pop it into the Q&A box and we'll take as many as we can at the end. And at the end of the webinar, we'd like to hear your thoughts about today's topic, and we'll be asking you to complete a short 1-minute survey, and we'll donate £5 to the Altitude Foundation for every completed survey. If you haven't heard of the great work that the Altitude Foundation does, I encourage you to check them out. They work with disadvantaged children who have a passion for technology to help them pursue a career in digital. But without further ado, let me pass you over to Nick.
Good morning. Thanks, Claire. Hopefully you can see my screen. But yeah, morning. As Claire said, I'm principal at Scott Logic in Newcastle. Thanks for joining me, and huge thanks to the Digital Leaders organisers for providing this platform this week and the opportunity to speak. If you build it, they will come. Quite a random slide, and I'm sure you're thinking, where does this fit in with open finance? But it's the title of the presentation and a widely used phrase. So what I didn't know before I started researching for this presentation is that the quote was originally taken from a 1989 Kevin Costner movie, Field of Dreams. And if you build it, they will come is actually a misquote from the movie. The actual quote being, if you build it, he will come. So there you go, just some movie trivia before we start, and absolutely nothing to do with what I'm here to discuss with you today, which is where the fintech industry is heading with open banking, and then looking ahead of the opportunities and the challenges that we're going to see ahead for open finance. As Claire said, there's going to be time at the end for any questions also. So I don't think we can talk about open finance really without looking back over the last couple of years at open banking. Now, this isn't a presentation on open banking. If you are interested in open banking, I have wrote a blog post, which is on the Scott Logic website. Shameless plug there for you to go and have a look at that. But yeah, it's really useful, I think, to have the context on what open banking is as a precursor to open finance. So for those who don't know what open banking is, it's effectively the UK version of its European cousin, PSD2. It was brought in January 2018 by the Competition and Markets Authority with the intention of increasing competition and innovation in the market. Open banking involves the use of what's known as APIs, Open Application Programming Interfaces, for those who aren't technical. And they enable bank account holders to share their financial data with third parties. And I'm sure there's many people out there now, many of you watching, listening to this, who are actually using open banking services without actually realizing you are doing. So typically when you might aggregate a number of different bank accounts from different banking providers or use a third-party app, behind the scenes, open banking is doing a lot of the technical integration there. In terms of user stats and so on for open banking, so the number of consumers who choose to share their data through open banking has actually tripled since last February, believe it or not. COVID's definitely had an input, and it's definitely been a lever to increase those numbers as people increasingly use digital financial tools to manage their finances during the pandemic. And today, more than 3 million people and businesses are using open banking enabled apps and services in their daily lives. Just to throw some further stats at you, in February this year, Experian's open data platform recorded more than 188 million data sharing requests, which was up from 47 million in February last year. Separate research by the Open Banking Implementation Entity revealed that 1 in 5 UK adults started using online banking powered apps during lockdown, and over 50% of Brits now say they use them on a regular basis. So definite traction and adoption of the services, even in the last 12 to 18 months, which is great to see. And it's not just consumers. Around half of the UK's SMEs now use tools employing open banking functionality. And this level of adoption is likely to be reinforced as quite recently, as you may have seen in the press, HMRC are also now using open banking for tax payments. The 9 UK largest banks, known as the CMA 9, who were initially compelled to comply and adopt open banking API standards, now that compliance milestone is behind them. They've now gone on to beyond that narrow legal obligation to create services using open banking functionality to compete with services offered by some of the financial management app providers. So what's next for open banking? Last year, the Open Banking Implementation Entity published the final roadmap for open banking, which runs throughout the course of this year. The roadmap sets out work in a number of areas that are still to be implemented and support the further development of open banking. This includes features such as refund standards for the CMA 9 banks and things like variable recurring payments, which at the moment aren't a feature that's included within open banking. Over the last 12 months, UK Finance has undertaken a substantial amount of work in developing proposals for the future oversight of the open banking ecosystem, which is likely to include open data and open finance. So what is open finance? Well, at the moment, it's an idea and nothing more than that. However, open finance will take the core principle of open banking, i.e. securely sharing data with third parties via APIs, and extend out those use cases to all other consumer financial products. So things like savings, investments, mortgages, credit, pensions, and insurance, with the goal of delivering real value for customers. Open finance will build on the open banking principles of allowing TPPs, third-party providers, access to customer accounts by way of customer consent through a standard set of APIs in order for the TPPs to read a customer's financial data and allow that right access to initiate transactions on their behalf. So things like payments, apply for credit, switching accounts, or make an investment. And just to bring this to life a little bit more, so what exactly are some of the core features that we may expect to see as a consumer or an SME from open finance? As consumers, in order to better understand and manage our finances, at a minimum, we're going to need a technology solution that provides, firstly, a single view of our current financial position. So what's our almost a health check across all of our financial products. And this is going to allow you and I to easily understand if we have spare money to put into savings. Could we make a mortgage overpayment? Should I move some money from that account into a pension pot? And it will allow the third party to do this on our behalf if we allow them, with the possibility of automated machine learning or rule-based systems and AI actually doing that on our behalf. Secondly, we're going to need a cross-market view of the most competitive products, ideally tailored to our lifestyle circumstances. So everyone's different, everyone has different income and different targets in terms of savings and so on. So this cross-market view is going to give a clear comparison of against our existing financial products in terms of annual percentage rates and so on. Thirdly, the ability to easily switch products to the most competitive or those more suited to our lifestyle circumstances is going to ensure that we get the best of market deals that are really tailored and complement our lifestyle and spending habits. And again, that's going to open up the possibility of automated machine learning to make the switch on our behalf as soon as it becomes financially beneficial to the customer. And finally, the ability to easily make payments and move money across our portfolio of different financial products. So that's just a flavor of some of the really high level basic use cases we will expect to see from Open Finance. But what does that mean? What's in it for us in terms of value? So if I'm giving access to my personal financial data, what value will that bring me? What value will it bring to a small business, for example? And Open Finance could really transform the way consumers and businesses use financial services, allowing firms to develop services that benefit consumers and businesses, improve competition, financial capability and inclusion. And that includes things such as personal financial management dashboards that enable us to understand and optimize our financial position. So giving a holistic view on cash flow, savings, investment, spending and goals, for example. I've mentioned automation quite a bit, but automated switching and renewals that can remove friction and encourage shopping around. So really opening up the market to competition. Providing advice and financial support services for mass market consumers, allowing us to make financial decisions, making it easy to share comprehensive information with advisors. And there's also value around credit worthiness assessments, so more accurate data in that space, increasing access to credit by enabling third parties to review cash flow holistically and identify suitable credit products for both businesses and consumers. So all sounds great, and that should really translate into benefits such as increased competition. Innovation in the market is going to offer compelling customer service, which would flourish, driving competition between firms. Improved advice. Open Finance would make it easier for any advisors to quickly get a financial picture of a new or an existing customer. Product innovation, including greater tailoring of products to suit individual circumstances and needs, where potentially we can see a future where tailoring could then work across sectors by combining products to build up a portfolio of products that work best for a customer. And access, so greater transparency around people's finances is going to improve access both to a wide range of financial products and services. It would also be likely to lead to basic financial services for some of those that are currently excluded from products. So pensions, retirement. So personally, one of the areas from Open Finance that I'm really excited to see it disrupting is the pensions industry, which is a £6 trillion industry. And I'm sure if anyone who's saving for pension has a number of different disparate pensions, it hasn't entered the digital world yet. I think it's fair to say it's an area ripe for digital innovation. Previous attempts to increase transparency of pension funds for customers have been blocked by complexity and lack of incentive for the pension providers to actually open up and do that. Unsurprisingly, because of the lack of transparency and openness in the UK pensions market, over 60% of pension savers currently don't know their current pension balance. And there's over £20 billion in lost or unclaimed pensions in the UK alone, which is just crazy. In recent years, though, there has been new entrants into this market. I signed up with a company called PensionBee, and I'm no promoter of PensionBee. I'm not on a commission with them, but I just found using their service to be really refreshing. It brought together a number of different pensions I had from different employment in the past into one app. So I have a clear view of the balance and potential increases on that balance. And PensionBee are one of the first of a new breed of online pension providers disrupting this very outdated market in the UK, simplifying the consolidation and the management of pensions through their app and fighting for the rights of pension savers. However, Open Finance goes a step further. Open Finance has the ability to create further opportunities for pension providers to combine transactions, savings, investments, and pension data to allow automated informed assessments on whether customers are setting themselves up for a stable retirement in the future. The Money and Pension Service also set up the Pensions Dashboard Programme, which was originally conceived by George Osborne back in 2016. The Pensions Dashboard is designed to give consumers an overview of all their pensions in one place. However, this ambitious project had to be rebooted in 2019 after reaching its intended launch date with no dashboards in sight. However, the current roadmap for the pensions dashboards being available as part of a compulsory rollout has seen major delays, and it's still some way off in 2023. There are lots of regulatory hurdles to overcome, but it's positive news, and definitely there is momentum building around that initiative. So I think we need to learn important lessons from open banking with regards to retirement and pensions, but also acknowledge the differences and extra challenges. The scope for open pension data is much, much wider, covering large providers, hundreds of smaller schemes. And the big difference to note, I guess, between open banking and retail banks, current accounts, savings, credit cards, and so on. In open banking, all of the information effectively was already digitized and connected with an easy way for consumers to prove their digital identity. In the pension sector, as you can imagine, there's a lot of legacy tech within pensions. There's a huge upgrade program needed to digitize a lot of that backbook data in the pension sector. So I think that's one of the major challenges that we'll see with bringing pensions online with open finance. Okay, so just moving on then. So open finance, it sounds great. So how do we move to this nirvana, if you like, of open data and open finance? Given the success of open banking, as well as UK and international developments, the government and industry has been considering the potentially transformative benefits that could come from open finance. The Financial Conduct Authority, the FCA, published a call for input in December 2019. And that call for input was to help identify what more they could do to help support open banking and to inform a strategy of regulation towards open finance, given its potential benefits and risks. There were 169 respondents to that call for input from third-party providers through to some of the larger banks. And in March this year, the FCA published its response, setting the proposed direction of travel. The response from the FCA also provided the backdrop and context to a variety of government initiatives that will be integral to the success of open finance. Some of them I've just noted on that slide there. The first one, smart data. In 2020, the Department for Business, Energy and Industrial Strategy, BEIS, as they're more commonly known, said that it will legislate to make it possible to require industry involvement in smart data initiatives, including open finance. Additionally, digital identity is a big part of open finance. The government established a digital identity unit, a DIU, in June 2019. This is a collaboration between the Cabinet Office and the Department for Digital, Culture, Media and Sport, the DCMS. Its aim being to bring together policy, legislation, regulation and technical expertise to develop the right conditions for a digital identity market in the UK. And as recently as February this year, the government published draft rules governing the future use of digital identities. The new trust framework laid out the principles, policies, procedures, and standards governing the use of digital identities to allow for this sharing of information to check people's identities or personal details in a trusted and a consistent way. And once finalized, the framework is expected to be brought into law. And if anyone is interested in knowing more about digital identity within government specifically, there is a presentation tomorrow, a panel discussion that I'm chairing at 11 a.m. So again, shameless plug, but feel free to attend that. We've got GDS, Scottish Government, and DWP on the panel tomorrow. So aside from digital identity and smart data, some of the main obstacles to open banking that will need to be addressed for open finance include things like some form of compulsion. So why should financial organizations, pension providers, etc., open up their data at huge cost? Another challenge is the legislative and regulatory framework. So again, that needs to be in place, and it needs to be government-led. Common standards was a big hurdle for open banking, both in terms of the technical API standards, but also user experience and operational standards. So again, they need to be put in place for open finance. There needs to be ideally a separate self-contained implementation entity to manage and control the rollout. Open banking set up the open banking implementation entity, who did a great job in making sure there was a consistent and standard rollout across both the CMA 9 banks and other banking organizations. Again, there needs to be an independent implementation entity doing a similar role across open finance. And there needs to be a clear delivery roadmap for open finance, ideally a phased, not big bang approach. One of the key learnings from open banking was that phasing was key, both from putting the burden on banks, but also on the third-party app providers, to allow them time to build their apps, to build the APIs, to integrate together. A proposed roadmap and sequencing of priorities for open finance could look something like, firstly, we start by widening the scope of open banking. There's still things to do in open banking, so that could cover non-PSD2 accounts, for example, and other banking products. That could then be followed by savings, mortgages, loans. So some of the products that are easy to standardize with a core set of features and potentially already digitized. And then finally, look at some of the more difficult and more lack of digitized solutions, such as pensions, investments, and insurance, where they're going to need more bespoke solutions. They're going to need more time to digitize their services. The implementation of open finance should be proportionate, phased, and ideally driven by consideration of credible consumer propositions and use cases. A widening of open banking to cover non-payment accounts and other banking products could definitely potentially be done more quickly than the other new financial products. And a big bang approach to open finance is clearly not feasible or desirable. So there's clearly a huge leap to be taken to get us from open banking to open finance. There's going to be obstacles and barriers to overcome along the way, not least including the technical challenges I've mentioned of upgrading legacy platforms and maintaining that API infrastructure. Security is a big concern, so security and legal concerns for both parties involved in any of these transactions, particularly in the absence of a liability framework. Challenges with the verification of identity until there's a standard portable digital identity brought in for open finance. The lack of standardized data formats and the technical challenge of managing inconsistently defined data sets. As I've mentioned previously, a lack of API standards could mean that third parties must integrate with multiple provider APIs and data is not shared in a consistent manner. And then, as we saw with open banking, a lot of these organizations have competing internal priorities and investment for change projects. And then finally, implementation costs. The costs of developing and implementing a technology strategy to deliver open finance could be significant. Standardizing and digitizing data could be a considerable undertaking for certain firms, as could upgrading legacy technology and security systems. As I've mentioned previously, this really is going to impact some of those providers with extensive legacy systems and backbooks, such as pension providers, where it potentially is a multi-year program of work that comes at great cost. Okay, so what's next with open finance? And I've just laid out some of the key areas on the journey, I guess, from open banking to open finance that need to be addressed. There's a shared consensus that the following core areas need to be addressed. So firstly, I've mentioned this a number of times, government regulation. This needs to be in place, and there are steps at the moment with the FCA to get this in place. I think that there's a carrot and stick approach here. The carrot is only going to get us so far. There definitely needs to be a compliance stick to make people move in the right direction on this, as we saw with open banking. A liability model. There needs to be a clear liability model that is clear and it's fair for all parties, to protect consumers, but to also protect the organizations involved in open finance. There needs to be an agreed set of API standards and interaction with open data initiatives in other industries. This can't be done as a siloed piece of work. I've mentioned the oversight entity. Open finance is going to need an independent implementation oversight entity similar to OBIE to oversee and ensure compliance in a structured, consistent and fair way. And digital ID, so digital identity, security, massive part of open finance. An agreed digital identity solution with options to piggyback potentially on the work being done across government at the moment. And finally, a clear and achievable delivery roadmap, phased, not big bang, is going to be key to the implementation. Again, some sectors, some areas of finance are going to be more ready than others with their products already being digitized. So that phasing, that list of priorities is going to be key to the success of the program. It was generally agreed that the draft principles set out in the FCA Call for Interest are a good starting point to underpin an open finance ecosystem, with the principles effectively needing to be flexible enough to allow different models to develop. And this really needs to be done in collaboration with government and other industry sectors, such as open data, to create actionable change in regulation. So to close, personally, for me, I think open finance could really benefit consumers and society in general. As we've learned from open banking, it's going to be complex, it won't be easy, it's going to be expensive, and it's going to take much longer than anyone plans to implement this. However, the industry's learned a lot from open banking. We're not starting from a blank sheet of paper with this. There's a lot of principles and learning to build on here. And I believe that as long as there are clear, tangible benefits, both for consumers and small businesses, then opening up data and open finance could really transform the way consumers and businesses manage their financial data and health in the future. And if anyone has any questions, I just wanted to leave my, ScotLogic's website address there, but also feel free to reach out directly on my email address. Thanks for listening, everyone, and I will now hand back to Claire.